Hello and welcome back to Market Vibes by CA Sri Lanka. I am 𝗟𝗶𝗀𝘀𝘁 and here's your monthly economic update for August 2025. Looking first at inflation. Inflation was recorded at 1.2% in August 2025 based on the Colombo Consumer Price Index. This was versus a negative 0.3% recorded in July 2025. Notably, this is the first time positive inflation was recorded since August 2024. Inflation on a month-on-month basis picked up amid the lower base effect as well as higher prices in the non-food category. Moving on to interest rates, T-bill rates declined by 10 basis points during the month of August 2025, whilst the average weighted prime lending rate saw a 13% decline to 7.97% as of the end of August 2025. The 12-month T-bill remained broadly unchanged at 8.03%. Looking at credit to the private sector, this continued to improve on a year-on-year basis, with the latest numbers for July 2025 seeing a 20% growth year-on-year and 2% growth month-on-month to reach 9.1 trillion rupees. In terms of policy interest rates, the Central Bank of Sri Lanka has two more monetary policy meetings left in 2025, one in September and the next in November. The Central Bank Governor has in recent interviews indicated that they will remain cautious about further rate cuts, although they do have space given that the inflation target of 5% is not reached as well as the current policy rates are at around 7.75%. So with that, we could expect further rate cuts if the inflation does not hit the 5% target level, possibly in 2026. Looking at the exchange rate, the 𝗟𝗻𝗀𝘀 remained broadly stable in August 2025, with the 𝗟𝗻𝗀 trading at 301.91 rupees to the greenback on 12th September 2025. Looking at gross official reserves, Sri Lanka's reserve position was reported at $6.16 billion in August 2025, which was a slight growth from July 2025. The central bank remained a net buyer of foreign currency from the market with $143 million in net purchases during the month. Looking at external trade, Sri Lanka's export earnings improved by 15% on a year-on-year basis to $1.3 billion in July 2025. This was mainly driven by a 17% growth in agricultural exports and a 14% growth in the textile and garment category. Imports increased 9% on a year-on-year basis to $1.9 billion in July 2025, with consumer goods imports growing by 49% year-on-year, while the investment goods imports increased by 19%. Majority of the growth in consumer goods imports was driven by personal vehicle imports. The trade account deficit contracted by 4% year-on-year to $580 million in July 2025. Looking at tourist arrivals to the country, this improved by 20% year-on-year in August 2025 to 198,235 persons during the month. The average daily arrivals has declined in September so far given the off-season. August generally is a significantly better month in the off-season due to events like the 𝗟𝗻𝗀𝘀𝘀 taking place in Sri Lanka, which attracts a significant amount of tourists. Moving on to worker remittances, this too improved by about 18% year-on-year in August to reach $681 million during the month. Finally, looking at capital markets, the Colombo Stock Exchange continued to witness the positive momentum it has been seeing over the last few months, with the all-share price index gaining about 7% over the course of the month. However, in the first couple of weeks of September, we have seen a slight pullback, but this has started to reverse since the correction. And with that, we will conclude this month's Market Vibe session. Thank you very much.